Hello and welcome back to my channel. Full disclosure, I'm a long-term Bitcoin holder. I'm not here to sell hype. I'm here to protect freedom and capital. So I'm here to make this video for you because it's a Bitcoin revolution. And what if I told you that the biggest opportunity of the next 5 years isn't in stocks or real estate or gold, but it's in Bitcoin. And I'm going to explain everything why. So bear with me because I'm going to explain what a miner is and all sorts of things. So welcome to the deep dive into why Bitcoin is on the path to outperform all other assets and how the upcoming 2028 supply halving, I will explain the halving, so stick with it, sets the stage for a financial shockwave. So in this video, I'm going to break down what the problem Bitcoin solves, the current supply-demand metrics, the institutional and national adoption, and the impact of the halving and why Bitcoin might hit $1 million by 2030. So let's start at the beginning. The problem Bitcoin solves. In today's world, fiat currencies like the dollar, euro, pound are inflationary by design. This means that government prints money to finance debt because they all have, trillions now in debt. Devaluing your savings by on average 3% a year, usually typically 4 to 6% in real terms. This means that £100 or $100 will be equal to just £66 or dollars in 10 years, in 10 years time or less. So imagine you've got $10,000. It's worth $6,666 in 10 years time. It's going backwards. That's not good, folks. So look, Bitcoin was designed to fix this because it's decentralized. There's no central bank controls, permissionless. Anyone can use it. Censorship resistance. No one can stop a transaction. Important. And most importantly, it has a fixed supply of just 21 million coins. And I'll go into that in more detail a little bit later on. This makes Bitcoin the world's first digital scarce monetary asset. And it's a relatively new asset. It's been around for, over 10 years, 14 years, I think it is now. So it's a relatively new asset in comparison to everything else. Kind of new money, I suppose. So as of May 25, 19.87 million Bitcoins have already been mined. I will talk about mining later. That means just 1.13 million are left, ever. There cannot be any more. It's coded in. They cannot make any more Bitcoin. So every 10 minutes, a new Bitcoin is created as a reward for miners. This rate gets cut in half roughly every 4 years in an event called the halving. Sounds like a horror movie. It's not. It's a good thing. It's a positive thing. And I will explain again the halving a bit further into the video. In April 24, the reward dropped from 6.25 to a miner, Bitcoin to miners, to 3.125. And in the next halving, which is March-April 2028, it'll drop to 1.56 Bitcoin reward. This means that in 2025, 450 Bitcoin are mined daily. In 2028, only 225 Bitcoin a day, a 50% drop, halving in new supply. This built-in scarcity is like gold. If gold became twice as rare every 4 years, imagine the value of gold, supply, demand, all that stuff. You're probably wondering what is a miner. So this is how it all works. So a miner validates transactions. When people send Bitcoin to each other, those transactions are grouped into blocks, like Minecraft. Miners, and there's thousands of miners globally, that verify each transaction in the block. Verify that's legitimate, meaning the sender has enough Bitcoin, the signature is valid, the Bitcoin hasn't already been spent, and this prevents fraud and double spending. And if I'm going a bit too quick, I do apologize, slow it down. It solves, once a block is filled with valid transactions, miners race to solve a cryptographic puzzle, love that word, cryptographic puzzle, using computing power. This process is called proof of work. You might see the term proof of work everywhere in crypto if you're watching crypto videos. It's important and a good thing. The puzzle requires finding a number called a nonce that when plugged into a hash function produces a result that starts with a specific number of zeros. It's compute, I can say the word. I've written this bit down, it's really important. It's computationally hard, but easy to verify, okay? Because there's lots of information for me to go through, so I've written it down. This gets added to the block of blockchain. The first mine to solve the puzzle, broadcast this solution. I've done it, I've solved the puzzle to the network, and it gets verified by the nodes. The block is added to the blockchain. This new block becomes the next page in Bitcoin's global ledger. And of course they get rewarded, so the miners get rewarded, and that's the 3.125 Bitcoin reward in 2025, which will halve in 2028. So you can see how it goes. Now miners will sometimes sell some of their Bitcoin to pay for infrastructure, staff, etc. But right now, because of the traction of Bitcoin, many will hold. So supply and demand, let's talk supply and demand. Over 70% of Bitcoin hasn't moved in over a year. That's long-term conviction. So like me, for example, I will hold my Bitcoin, cold wallets, and I have no plans to sell it. And I will watch the price, appreciate. And, if we hit the $1 million per Bitcoin, which is exciting, then maybe I'll sell some, or who knows, maybe none. So up to 4 million Bitcoin is lost forever. So keep this in mind, 21 million Bitcoin, 4 million lost. Okay, 1 point something million yet to be mined, 70% hold. They don't sell. So really around 4 to 500 Bitcoin are liquid and tradable. Liquid basically means they're there to trade. People will sell them, they'll buy them, and so on. So now compare that to demand. In the last 90 days, demand has outpaced supply by the ratio of 3.2 to 1. And in the last 7 days alone, the ratio is 5.2 to 1. This means that for every 1 Bitcoin, 5 are bought. There's demand of 5.2 are bought. This is called the supply squeeze. So the supply squeeze is accelerated, and we haven't even factored in institutional demand yet. So institutional demand are things like ETFs, which is an exchange-traded fund, which lets investors buy Bitcoin, basically like a stock. So an ETF, exchange-traded fund, is a type of investment fund that is traded on stock exchanges, just like individual stocks. In the case of Bitcoin ETF, it allows people to and institutions to invest in Bitcoin without actually buying or storing it themselves. Instead, they buy shares in a fund that holds real Bitcoin on their behalf. In short, a Bitcoin ETF is regulated, stock market friendly. It comes with fees and charges, etc. But if you're not comfortable in buying Bitcoin off an exchange and then putting it in a cold wallet and all of that jazz, it's another way of you buying Bitcoin. So since January 24, the US ETFs have changed the game because as of May, they hold 1.183 million Bitcoin, which is over 5.6% of all Bitcoin. That's staggering and huge. So this is the demand and part of the demand shock. So look, institutions and sovereign adoption, that is already happening. Corporations are stacking Bitcoin, like MicroStrategy. They now own 576,000 Bitcoin, over 2.7% of the supply. You've got Tesla, you've got Block, you've got other public companies also hold significant positions. You have sovereign nations are entering too, like El Salvador, I think was about the first. Bhutan, they mine Bitcoin with hydropower. Central Africa, African Republic has Bitcoin as an official currency. Argentina and members of BRICS are exploring Bitcoin for reserves. And this isn't fringe anymore. It's a global thing. And of course, what you have are the dynamics of the network effect, which is, oh my God, they have some, I better get some, or if it goes big, I'm going to miss out. So network effect is definitely kicking in here. Look, the 2028 halving, which is the next catalyst, or the big catalyst, in March 2028, maybe April, Bitcoin will undergo the next halving, and the block rewards will drop to 1.56, as already mentioned, every 10 minutes. Daily supply will fall from 450 to 225, and historically, Bitcoin's biggest bull runs occur 12 to 18 months post-halving. So the halving happens, and then on the build-up of usually the first sort of 6 months tend to be fairly quiet. After that, it then starts building traction, which is what we've seen in Bitcoin. Now, if you look at the Bitcoin price going back to April 24 and follow that trend through, you'll see the curve. Okay, and that tends to happen. And you can look at previous halvings as well. and that happens verbatim every halving. And why? Because scarcity increases and miners' selling pressure decreases, demand continues to rise, and this is the perfect storm for other exponential moves. It's just a major catalyst. So Bitcoin is outperforming legacy assets because it's simply designed better. So gold against gold, Bitcoin versus gold. Bitcoin is scarcer, more portable, easy to verify. And when we say more portable, Michael Saylor of MicroStrategy, who has that massive holding of Bitcoin, over 500,000 Bitcoin, something like $60 billion of Bitcoin, crazy, but good. So, he says that, of course, you can't jump on an airplane with $50,000, even $100,000 or pounds of Bitcoin, of gold, because you get stopped, it'll get confiscated. But of course, with Bitcoin, it's portable, it's digital, so you can take it anywhere. So Bitcoin against stocks, it's not tied to a company's earnings or political risk. So whereas with the stock market, price goes up and down according to profitability, good news, bad news, goes up and down according to political risk. When some bad news comes out, geopolitically, price goes down. If some good news comes out, it may go up and this kind of thing. Bitcoin tends not to be so prone to that. And that has been proven in the recent geopolitical landscape. So where stock markets dive bombed, 20, 25, some 30%, Bitcoin didn't. It came down a bit, but it didn't come down nowhere near like the stock market. So Bitcoin against real estate, well, Bitcoin is more liquid. You can sell it, have your money. Real estate can take you 12, 18 months or more to sell, especially if you have a tenant. It takes you longer to, unfortunately, get the tenant out and then put it on the market and then sell and so on, okay? Bitcoin against cash, well, deflationary. I've already explained your cash goes backwards with inflation. Bitcoin is on a steep curve, a steep climb. Fiat just loses value over time. Again, fiat being pound, euro, dollar. Bitcoin is software-based monetary energy. It's a harder asset than gold with a growth curve powered by code, which is a good thing, I think. I own it, so it must be a good thing. So here's some price forecasts. So based on supply and demand and the research that I have done on the ratio, the 5.2 to 1 at the moment, and I can see that increasing. The global adoption by governments, by institutions, by even pension funds. This is where valuations tend to come in. So these are estimated valuations. And again, it's important to sort of do your own research as well, because, am I an expert? I suppose I am in some respects. So we have valuations of 2025, estimated valuations, and some other bigger than me Bitcoin holders estimate these too. Base it at $150,000 with a bull of $180,000 to $250,000 for this year, 2025. Now 2026 is pretty much the same, $150,000 to $250,000, and then 2027, because of course everyone knows the halving is coming. The estimate is $180,000 to $400,000. And 2028, so bear in mind, halving kind of happens, $220,000 to $600,000. 2029, we're looking at $300,000 to $900,000. So this is where we go in the sort of 18 months, 1 year to 18 months post-halving. And 2030, $400,000 to $1 million plus dollars. Now, by that time, halving's happened. We have institutions in, we have governments in, and it's all sort of just happening for Bitcoin. Even a small percent allocation, like 2% from global institutions, capital could drive prices far beyond today's levels. And you just get the feeling it's inevitable. You look at the narratives on social media, you look at what's going on with the politics and what they're saying and the regulators and so on. It almost seems inevitable. So, in conclusion, prepare now. Bitcoin's fundamentals are clear. The supply is shrinking. The demand is rising, and institutions and sovereign adoption is accelerating. Add the 2028 halving, which is approaching fast. Time goes really bloody quick. And look, you're just not too late. So if you want to protect your capital, get into something that has what appears to be the fastest growth rate out of any asset class, then I believe Bitcoin is the one. And look, I really hope that this video has highlighted a few things. I really hope that it's educated you a little bit more to understanding how Bitcoin works, from the mining to the holding to the growth curve, and why, and the limits, how much is available, and why it's such a great opportunity over the next 5 years. So up to you, do your own research. I'm not a financial advisor. I live by what I preach. Good luck, and I wish you well.